Hi there. Good morning. Good day. Hi there. Hey, welcome back, everybody. Good to be here. Ed Ponsi, your FX educator, here on behalf of FX Street one more time. Welcome to the end of May. Wow, it's May 30th. Tomorrow's the end of May, I guess. But here we go. It's coming to the end of May. And yesterday, a big holiday in the US and the UK, right? And we're seeing a big spike in the euro right now. And the what's going on here? There are reports circulating. Let's just get this out of the way right at the beginning here. There are reports circulating out there that the European Central Bank, they've had an easing bias for years. And what's an easing bias? Their bias has been toward to doing things that would either lower interest rates or lend money to banks or do other things that would make things easier, right, for the economy to grow. That's called an easing bias. And unnamed sources, the ever popular unnamed sources, are saying that at the next meeting of the European Central Bank, which is coming up in June, the ECB is going to discuss removing this bias toward easing. And that doesn't necessarily mean that they're going to raise interest rates. And I think if you look at some of the inflation data from this morning, I believe it was out of Germany, they can't. But the easing bias is going to disappear. And so you saw the euro jump 45 pips in about 5 minutes on that news, that big green candle. 5-minute candle, you saw a 45-minute jump. And then, it pulled back a bit. It lost about half of that gain, and we'll see what happens next. But in case you're wondering why we saw that big jump in the euro, that's what happened. The euro just jumped up there because word is out that the easing bias is about to go away from the European Central Bank. And I think it's normal. The US has been the only major central bank out there that has been raising interest rates, and that can't go on because all of these countries are intertwined. And so we saw for a long time, right? We saw for a long time that the dollar, right? I'll show you the daily. For a long time, the dollar, come here, dollar. For a long time, the dollar was rocking. Long before interest rates in the US actually even started to go up, the dollar was rising. Why? Because it was anticipated that the dollar would raise and that the Fed would move first. Then when the Fed was moving, the dollar began to move down. Why? Because it was then anticipated that others would follow suit. And nobody has followed suit yet, but you can see it coming that that Europe is going to follow suit at some point. Now, is it going to happen soon? I don't think so. Look at this inflation data. Consumer prices out of Germany down 0.2. CPI down 0.2 in May, month over month, and harmonized index of consumer prices for May down 0.2 in May. So it doesn't look like it's going to happen anytime soon, but it's probably going to happen at some point. Okay. All right. So just so you know what's happening, and look, people get excited and they say, "Wow, should we jump on board?" I think if you jumped on board on this move, you were probably disappointed. As soon as you got filled and hit the button and got filled, it pulled back. And it's dangerous to try to chase this stuff. Okay, it can be hazardous to try to chase after these things. So let's be careful about that. All right, let's use our heads. Let's not just go chasing. Okay, now bigger picture on the euro. Right, we'd like to start from the longer term, work our way in, and I'll even start from the weekly. We'll push out. We've had a heck of a rally, but we do appear to be stalling up here. And we said there was a sign. You could tell down here that like the lack of a pullback in here was a sign that it was going to take off, and it did take off. Right, it took off very convincingly. But we really haven't seen too much follow through up here. And so from the weekly standpoint, we had last week, we basically had, it's not a doji, but it's what we call, a high wave candle, a really high wick, but it comes back down. That candle, it's nearly a doji, nearly an unchanged candle for the week. And this week's candle is very little change to it. We come down to the daily, right? And we said, look, there's a lot of support. You see the arrows, right? You see the arrows. Support. Support. And we could put another arrow here, support. We said last week there's a lot of support at 111.67. Now that support, you can see that support breaking today. So maybe it's short now, and maybe this rally is people getting too excited and jamming this thing up 45 pips over something that is going to happen a year from now. Like they're not going to raise interest rates today. They're not going to raise interest rates at their next meeting. They might not raise interest rates this year, but people get excited because it might not even be people. It might be computers getting excited, algorithms getting excited because they see the easing bias terminology going by. But at some point, this is 111.67, which is an oddly specific number for me. I usually don't get that specific, but I wouldn't be surprised. Like we can see how this has been support on 3 separate daily candles now. And you can see the price started to bleed through and came way through there today, pushed right back up to that area again. But honestly, I think it might be short here because you think about it, right? Who's buying here, buying here, buying here? How did they feel when it pushed down? How did it feel when they were right here? They probably didn't feel too good about it. So it pushes up. And if you bought it right here, or right here, or right here, now is your chance to sell at break even and get out of this trade. It's like, gosh, I made a mistake and now the price is down here. So you don't have, even if you didn't place the trade, you know how that feels. You can understand and relate to that feeling of regret. And that feeling of regret is really what I'm talking about here. Because, look, traders are supposed to be unemotional, but they can't help themselves a lot of the time. Okay, so it very well could be a short now because this area is breaking. And this gives the people who, this line is breaking, And that gives the people who bought on that line a chance to break even. So something to think about. 1 hour oversold RSI, but needed to wake up at 2 a.m., but I refuse to set a limit order and go to sleep for this type of trade. Yeah, I hear you, Carlos. Carlos is talking about RSI. Let's go to the RSI for the hourly, and I'm with you on this. You see, it's a 24-hour market, and that's part of the issue here. If you're going to do trades on the 60-minute, you're going to encounter those type of situations, and a lot of time, I'm going to just give the trade a pass because because he's talking about, look, there's your buy signal at 2 a.m. And yeah, that would have worked out nicely, but I'm not getting up at 2 a.m. because there's a certain quality of life after a while. I mean, when you're new at this, it's different. When you're new at this and you're very excited and you've decided I'm going to make this my career. Well, when I was new at this, I used to get up at 2 in the morning, but after when you've been doing this for a number of years and you're established and after a while, getting up at 2 o'clock in the morning isn't going to make a huge difference. And you say, well, okay, I'm already established at this, and now the reason why I got established at this was because you wanted to establish a certain quality of life, and you don't want to sacrifice that quality of life, and part of that quality of life is sleeping through the night. So, yeah, we want to sleep exactly, and you get to a point where you don't want to get up at 2 o'clock in the morning or 3 o'clock in the morning to place a trade, and I can relate to that certainly. So and that's I wholeheartedly, I'm with you on that one, Carlos. That's you can't catch every trade in a 24-hour market, and really, why even bother? After a while you realize, if I even tried to catch every trade in a 24-hour market, I'd never sleep. And then what would my quality of life be? It would be terrible. And you'll be a better trader if you get your sleep. I spoke to a trader. I knew a trader. I've known several traders who were doctor. It seems that psychology, being a psychologist and being a trader seems to mix. Being a trader seems to mix well with several professions. I would say I know a lot of traders who are musicians for some reason. Musicians. I know a lot of traders who are military or ex-military, probably because in order to be a good trader, you have to be able to follow instructions. This is something that I've always firmly believed. And the other thing is, it seems like psychologists really seem to be have a good grasp on this, because so much of trading is psychology, right? Anyway, here's my point. One psychologist told me once, Ed, if you don't sleep because you're constantly glued to your screen in a 24-hour market, here's what's going to happen. Your subconscious is going to sabotage whatever it is that's preventing you from sleeping. Your subconscious is going to find a way to make Ed sleep. So, if your trading is what's preventing you from sleeping, your subconscious is going to mess up your trading. Your subconscious is going to say, oh, it's this trading thing. This is the thing that's keeping Ed up all night. Okay, let's mess up Ed's trading so he'll go to sleep. Is that what we really want to see that happen? Absolutely not, right? So let's not let's not go that route, okay? So and Carlos says we need to move to Europe. At one point, you might laugh, but at one point I was thinking about moving to London because, of course, back when I was young and single, I considered moving to London because, from a time zone perspective, it's really the perfect place to live if you're trading Forex. At the time, I used to get up at 2 o'clock in the morning to trade the London Open. Well, if you live in London, you get up at 7 o'clock in the morning to trade the London Open. Well, that's perfect, isn't it? Right? And then you've got great trading all day long, right? Until when? Until the Americans are finished. And the Americans finish at around 9 o'clock London time, 9 p.m. So, gosh, you could trade from 7 a.m. till 9 p.m., go to sleep, do it again the next day, do it every day. London's probably a great place if you want to be active all day. That's probably a great place. But now I would never consider doing that because I don't want to be active all day. And that's another part of quality of life issues is, do you want to be active all day? Maybe when you're new, you want that, but the longer you're involved in this, I think the less you're going to want that, because I think what you're going to see is what I've learned is what works for me is placing fewer trades made more money. Longer time frames made more money. But this is something that you couldn't start there. You had to start on shorter time frames and place more trades, and you get more experience. And then you slowly evolve into someone who places fewer trades on longer time frames. You couldn't just start out on longer time frames. You have to evolve into that. Carlos says, if I'm not mistaken, our brains process about 60% thoughts per day and only 30%. We are aware of them, conscious of them. Oh, 3,000 that we are aware of. Go figure. Every experience we've had dwells somewhere in our brains. Yeah. We don't know what we don't know. And, it's so funny. I was watching something on TV, and it struck a nerve. And it's like, and somebody was sort of thinking, and you could hear their thoughts, and they were thinking, here's the problem with arguing with your subconscious. I'm not just you're not just arguing with, if you're arguing with your subconscious, you're not just arguing with the things that you know about. What about all the things that your subconscious knows about that you're trying not to know about? And it's like, okay, like what about all the things that you're actively trying not to know or not to think about that you really do know somewhere? And ouch, right? So yes, so sabotage, self-sabotage. We can sabotage ourselves subconsciously. So yeah, you got to sleep to prevent yourself from subconsciously sabotaging yourself. That's correct. And also, like one of the things that I think And someone told me once this too, like, okay, everybody hates being stopped out, right? Everybody hates it. But being stopped out is an important part of being successful. So if, let's say, you did everything right, you did everything correctly on a trade and you were stopped out, you've got to reward yourself. You've got to reward yourself. You've got to encourage that type of behavior. Okay? So you've got to do something, whether it's, something small, like buy yourself a hat. I don't know. I don't care about hats, but I don't know what people who are listening to this care about, but buy yourself something that you want, or I don't know, go see a movie. Do something go to a ball game. Do something that you eat a tiny little piece of candy. Do something nice for yourself. Try to reinforce positive behavior. Does that make sense? Try to do something good for you to reinforce that positive behavior. Okay? Because it does matter. It matters a great deal. And because that's when when people start getting stopped out, that's when they get frustrated. But really, getting stopped out is a crucial part of being successful. Right? We all know that deep down, but it's frustrating. And so dealing with that, part of dealing with that frustration is positive reinforcement. Right? So I guess this is really all about trading psychology, isn't it? But wasn't it Yogi Berra was the famous American baseball player who said that half of this game is 90% mental, which you could say that about trading too. Half of trading is 90% psychology. And of course, trading is 90% psychology. It is. You could know all about entries, exits, and stops all day long, but it's the psychology that undoes us, that really determines success or failure in the end. Because, Nick Leeson knows he's not supposed to average down on his trades. But it happens again and again, right? And then 10 years later, some guy at oh gosh, the name escapes me now. Some guy at a French bank does the exact same thing, even though he knows all about Nick Leeson. He does the exact same thing, and he loses even more money than Nick Leeson. Jerome Caraval, 10 years later, loses more money than Nick Leeson, even though he has Nick Leeson as an example of exactly what not to do. And then 10 years after that comes the London whale. And it always happens. Even all these people know better, and it doesn't matter that they know better because their psychology gets the best of them. And if it can happen to them, then it can certainly happen to us, right? Got to enjoy the wonderful life we've been given. Exactly, right? Win, lose, or draw, right? You've got to enjoy that life that you've been given and enjoy your health. All right, let's move on. All right, so anyway, this to me I don't know, if it comes back under this line, this feels like it could be a short-term short. If I'm going to short this, and here it is. You saw that as we've been speaking, it spiked up, and it looks like it's failing again. This could be a short right here. It's right on the line. So under that line, Under that line, it becomes a short. So there's no need for this to be a huge risk. My stop would be above 112. See that spike up? That spike comes just shy of 112. But I like my stop to be above 112. The bulls could only push it up. I'll put it on a 5-minute chart. The bulls could only push it up to 111.90, but my stop is going to be a little bit higher, 112.05. Make that red. I'd like to trail that down. Green for go. That's red for stop. That's about a 33 plus 5, 38 pip target. $111.30 is approximately 1-to-1. There's no way I'm doing this trade as a 1-to-1. But that might be a preliminary target. Because I see a lot more downside ahead, right? Let me look at all this. See all that rally here? That's a lot of potential downside in there. Let me push it to a 240 so we can quantify that a little bit better. I mean, I think you've got potential target all the way down to 108.50 here. Look at all that. It could go all the way back down to there, but that's being greedy. I don't want to be that greedy. But I've got my 1-to-1 set up. Oh, I see my second target right here. You see this support area here? That's right at 111. Let me zoom this. I'm going to put a line right here. BIP. So that says 110.97. That's pretty much 111. There you go. 111 is support. So I'm going to have a target just above 111 as a secondary target. Maybe 111.05. And that looks like it's about maybe 2-to-1, not quite 2-to-1. That's not my final target. But I've got a 1-to-1, I've got a 2-to-1, and I've got another area of support right around here. That's 109.70. Well, I can get up out of there. I can put that target above. This is not going to be the target. I'm going to get out above this area. You can see a little bit of support there. Let me go back on the chart a little bit. There's this at 110.20. I think maybe that'll come into play instead. That's above this. So that's an area where the price seemed to hit something here. 110.20. So I'm going to call it 110.25 for a third target. Let's see what happens. So I think we're looking at an overreaction here on this news. And one thing we didn't talk about, there was an interesting item on Greece this morning that we didn't talk about. And maybe we can talk about that a little bit on the next session. But the euro dropped a bit overnight, kind of hit an air pocket overnight on word that Greece might just turn down the next bailout. So anyway, but I've got a setup here. Let me go back to the 60. And now I've got all my ducks in a row, or most of them. Entry 111.67. Again, these are not trade recommendations. I'm just doing my setups. This is my just showing you my thought process here. And it looks like I've got approximately a 1-to-1 target, approximately a 2-to-1 target, and my third target looks like it could be about 4-to-1. Okay, so let's see what develops here. Okay. All right, that's going to wrap up this session. And my name's Ed Ponsi. I'll be back with you in 1 hour. I'm sorry. No, I'll be back with you in 30 minutes. And we'll pick it up where we left off. Still plenty to discuss, so come join me in 30 minutes. I'll talk to you then. Take care.